Ladies and gentlemen, good day and welcome to Praj Industries Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal our operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisor. Thank you, and over to you.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Praj Industries Limited. On behalf of the company, I'd like to thank you for getting the company's earnings call for the fourth quarter and financial year ending 2023. Before we begin, let me mention a cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Shashi Joshipura, CEO and Managing Director, and Mr. Sachin Raole, Chief Financial Officer and Director of Resources. Now, without any further delay, I request Mr. Joshipura to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good afternoon, everybody. I welcome you to Praj Industries earnings call for quarter 4 and FY23. First, all of you had the opportunity to go through our results for the quarter ended 31st of March 2023. I would like to start today's call with the news of an historic development in the sustainable aviation fuel space. Last week, Praj, AirAsia and Indian Oil partnered for India's first commercial flight, powered by a blend of indigenously produced sustainable aviation fuel that flew the aircraft from Pune to New Delhi. The SAF blended in the ATF was produced by Praj using indigenous feedstock, leveraging its relationship with Geo, United States. Honorable Union Minister of Petroleum and Natural Gas, Shri Hardeep Singh Puri, received this special flight at the New Delhi airport. During the event, Mr. Puri mentioned that the government has plans to come up with mandates on SAF in near future. As India becomes signatory to CORSIA, mandatory blending of SAF from 2027 in accordance with the agreement will create significant opportunity. If we target to blend 1% SAF blending in jet fuel, India will require around 14 crore liters of SAF per annum, and this will translate to an additional requirement of 28 crore liters per annum of ethanol when things move on the ATJ pathway. In another significant development, our board has given us an in-principle approval for formation of joint venture with Indian Oil for production of variety of biofuels. Production of sustainable aviation fuel is likely to be the first project out of this JV. India's EBP 20 program is moving ahead as per the plan. Over and above the EBP 20 targets, OMCs have floated expression of interest for signing long-term offtake agreement with upcoming dedicated ethanol plants for additional capacity of 300 crore liters from 8 ethanol deficit states, namely Tamil Nadu, Kerala, Andhra Pradesh, Telangana, Gujarat, Rajasthan, Goa, Odisha, and Union Territories of Jammu and Kashmir and Ladakh. This creates an additional potential opportunity for rupees 4,000 crore. The government has launched 20% ethanol blended petrol at select outlets in 11 states in February, 2 months ahead of the scheduled 1st April launch, and it is expected that this will go nationwide by 25-26. India currently has the capacity to produce nearly 10 billion liters, which is expected to increase to 12.5 billion liters by end of 2023. Several state governments have started to create supportive policies to drive ethanol production in respective states. The Tamil Nadu government unveiled its TN Ethanol Blending Policy 2023 in March 2023 with a mission to improve farmer income, revive the sugar industry in the state, and to attract investments worth 5,000 crore in molasses or grain-based ethanol production capacity. The targets for the policy term are to be self-sufficient and meet the estimated ethanol blending requirement of 130 crore liters. Our board has given a final approval for a capex proposal of 200 plus crores, considering the potential presented by several positive developments in different business areas. We are setting up a modern manufacturing facility to be housed into a new subsidiary, Praj Limited. This unit will address the business needs arising out of significant developments in energy transition and climate action segment. We have very strong pipeline of inquiries building continually. The new facility will be set up near a major port with capex nearly of 100 crores. We are moving ahead with project development and expect to start the commercial production by last quarter of FY24. To accelerate commercialization of bioplastics, we are setting up first of its kind demo plant for polylactic acid PLA with capex of around 60 crores at Jejuri near on the outskirts of Pune. This pilot facility will be used for scaling the production of food-grade lactic acid and polylactic acid. We are also setting up a new catalytic lab at our R&D center, Praj Matrix, that will need an investment of around rupees 15 crores. This facility will become operational in August 23. Now coming to our business performance. Our domestic bioenergy business continues to build on its leadership position. As we had discussed in past, majority of orders came for ethanol plants based on the starchy feedstock. Sugar mills are also setting up dual feed plants now and are adding starchy feedstock modules to their existing ethanol facilities. Our inquiry pipeline is showing a strong continued demand for starchy and sugary feedstock-based ethanol plants. On international front, low carbon ethanol is developing as an interesting business opportunity in the United States. Owing to slowdown in the US market, this activity, while developing very healthily, might see a little shift in timelines for project finalization. We are in the process of completing FEL studies for several projects, which would then translate into firm business opportunity as soon as the economy returns to normal. In Europe region, we are discussing few potential opportunities for greenfield 1G projects in non-EU countries. Our service business is receiving promising response from customers in both domestic and international markets. Our strong offering of an entire suite comprising of enzyme, yeast, and performance enhancers is finding a high acceptance in the market. With a view to enhance our reach and service to customers, we are building a strong distributor network in both domestic and international markets. On the 2G front, I am pleased to share that we have produced first ethanol from our IOCL Panipat project. Our team is now focusing its efforts in continuous operation and reliability enhancement of the plant along with the IOCL team. As for CBG, our first rice straw-based commercial plant for HPCL has commenced biogas generation and flaring. This high-yield plant is now under stabilization and should start regular dispatch of CBG by end of June 2023. The business landscape is developing extremely favorably for our engineering business basket. On the EPCA front, the opportunities arising out of increasing demand for sustainable energy and decarbonization of energy and downstream chemicals, blue and green hydrogen, green ammonia, coupled with growing demand for waste-to-energy solutions, is driving the demand for modularized solution in a significantly positive way. Our traditional energy business of oil and gas, fertilizer, etc. is also seeing good traction, driving demand for our PPA solutions. On the ZLD front, we are working on bringing modularization approach to our offerings. We have already received our first order for a modularized ZLD system. This augurs well for future business development in this segment. Our brewery and beverage business has now reached its pre-COVID levels, and we expect it to translate to capacity enhancement soon. Fermentation is one of our key capabilities. We are capitalizing on it to explore opportunities for our PHS business in a large size, high capacity fermenter space. We have received an interesting order for a large size fermenters for a pharma application to be set up in Oman. We have also booked our first order in the semiconductor sector for ultra high purity water systems. PHS has a very healthy inquiry basket from its international markets too. The Union government is currently working on a policy BioE3, biotechnology for environment, economy and employment, that will boost biotechnology-based manufacturing for green growth. It aims to reduce dependence on petrochemicals in multiple sectors and attract over 10,000 crore rupee investments. As a key stakeholder, Praj will participate in developing national biochemical policy as a knowledge partner. Overall, we remain very positive on continued development of potential across our bioenergy engineering businesses. In spite of global economic challenges, we expect a favorable business environment aided by stabilized commodity prices and an ever-increasing awareness to decarbonize the global economy. Before I conclude, I would like to share and I'm sure all of you will join me in congratulating our chairman, Dr. Pramod Chaudhary, who was bestowed with Eminent Engineer Award by the Engineering Council for India in the industry category for his exemplary contribution in engineering field. With this, I will now hand over to Sachin for his comments on the financial performance.
Thank you, Shishir. The consolidated income from operations stood at 10 billion in Q4 of FY23 as compared to 8 billion in Q4 of FY22. PBT for the quarter stood at 1 billion as compared to 780 million in the corresponding period of last year. Profit after tax stood at 881 million as compared to 576 million in Q4 of FY22. For the full year 2023, income from operations stood at 35 billion as against 23 billion in FY23. PBT stood at 3 billion in FY23 as against 2 billion in FY22. PAT of FY23 came at 2.3 billion as against 1.5 billion of FY22. Export revenue accounted for 17.4% of FY23, and out of the total revenue, 73.8 came from bioenergy, 19.3 from engineering, and 6.9% from the PHS business. The order intake during the quarter was 10 billion, with 76.5% from domestic market. Of the total order intake, 82.3% came from bioenergy, almost 10% from engineering, and balance 7.8 from PHS business. As compared to the last year, export order intake has seen 9% growth, almost 743 crores as compared to 679 of the last year. The order backlog of March 23 is at 34 billion, comprising of 84.7% of domestic orders and 84% from bioenergy, 11.2 from engineering, and balance 4.6% from PHS business. Cash in hand as of 31st of March 2023 stood at 691 million, 6910 million, that is 6 billion. The Board of Directors proposed a final dividend of rupees 450, that is 4 rupees 50 paise per equity share, that is 225% of the face value of rupees 2 per equity share for the financial year ended 31st March 2023. It is subject to the approval of shareholders at the forthcoming annual general meeting. With this, I will conclude my remarks. Thank you all for joining. We could now be happy to discuss any questions, comments, or suggestions you may have. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Prathamesh Sawant from Axis Securities Limited. Please go ahead.
Yeah, hi sir. Congratulations for great set of numbers. So, sir, I just wanted to ask my first question with respect to your JV with IOC. Just wanted to understand what would be your capital allocation policy for the same. What kind of IRRs would you be expecting in this project, and what kind of returns can you expect from this project?
So you faded out towards the end of your question, but if you're asking what are the plans of the JV with Indian Oil, to give you the answer, currently we have both the boards have accorded an in-principle approval for this joint venture to go forward. When the joint venture is between public and private sector, there is a whole process that needs to be put in place, that needs to be gone through, and therefore we expect it to become functional only towards the end of this financial year. And as per the agreement, the joint venture will then obviously make out its business plans as it wants to go forward. As I mentioned, and the purpose is to propagate the cause of bioenergy in the country, and they will. We are expecting that they will start out on a SAF project to begin with, and as the development and the business model evolves, we will know what kind of investments will be called for, what role they will play in the SAF facility, etc. But it's probably a little too early for me to make comments on internal rate of return for that joint venture. That's little out in future. I hope I answered the question.
Yes, sir. Yes, sir. And secondly, sir, some more light on the high purity business. Do we see this demand for semiconductors positive for the high purity business?
Semiconductor manufacturing facilities also need more or less a similar grade of high purity water that a pharma application needs, and that is why I made a specific mention that that's the first contract that came through for, and of course not only for semiconductor but even their supply chain as well.
Okay. And finally, sir, one last question from my end is with respect to the engineering segment. So do we see good traction for the CPS and business, CPS modules?
As I mentioned, both the traditional sectors of CPS that CPS has been serving, oil and gas, fertilizers, chemicals, and on the other hand, the entire, which will be served by CPS, and Praj is a new subsidiary which will be specifically addressing the EPCA opportunities. Both of them are seeing very good pipeline built for inquiry and traction, and many of the solutions that either of them would offer to different segments would involve modernization.
Okay. And so what portion of it would be going towards green hydrogen or, the booming sectors?
So we are right now not saying that I will only go and chase green hydrogen opportunities, because our aim is to ensure that we are able to serve the needs of our customers. These are very focused customers. We don't have a very finite set of customers. So if they have a specific need for meeting a challenge or the solution for either a green hydrogen, it could be a green ammonia project, it could be an LNG project. So what's the nature of the project is one dimension, but what's important for us is that we are able to add value. So we are not going to restrict ourselves to only green hydrogen or anything like that. It depends on how the overall progress of the project develops. But across the broad spectrum and not necessarily limited waste to energy, green hydrogen, blue hydrogen, green ammonia, there are different segments which have different needs, and we'll be serving all these segments.
Okay, sir. Thank you, sir. That is from my end.
Thank you. Before we take the next question, a reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Levin Shah from Motilal Oswal AMC. Please go ahead.
Yeah, congratulations on good set of numbers. So my first question is on the exports opportunity, and specifically you mentioned in your opening comments that US market has seen some delay. But as we understand, there is a timeline under which this IRA benefits would be given to the companies who basically modularize their plant. So is this a very short-term delay that we are seeing, or there is the inquiries? How will we see this order inflow coming in from these inquiries?
Yes, great question. So when the IRA announcements were made, there was also for the industry based in United States, they're also seeking some clarifications on the laws that have been rolled out from the IRS, because there are some tax breaks and credits that are announced there. So how to avoid double counting, how do you go about specific counting, etc. So some of those issues are being resolved. That's number one. The banking crisis in United States has, so this delay is not that we have everything is half-long by 3 years or anything like that, but at least definitely for 2-3 quarter delay.
Okay. And sir, we were some of the projects we were already at like an advanced stage in terms of doing the project work. So for that also, have we seen some pause in the activity, or that is progressing, and it is only on the new inquiries that we are seeing some delay?
So the way the US projects progress is that they go through an FEL levels of studies, as they call them, and these studies are 3 stage. Some customers can go for 2 stage, but definitely 2 stage. Nobody goes for less than that. So those studies have moved forward. However, once the studies are over, the next step of creating the big capital investment is something that is taking a little more time, obviously because of the funding issues, high interest rates in the economy, etc. So I think those are what I would call as not long-lasting situations. So as I said, as soon as the situation turns, we expect that these will come back on the table, because as you rightly said, the IRA program goals still stay same. They are not changing.
Understood. And sir, the second question is on the capex. So Interestingly, we had announced around, I think, 100 crores kind of capex last quarter, and now we are saying that we'll do 200 crores with addition of this polylactic acid and the R&D capex. So this will be polylactic acid plant would be this will be a pilot plant, right? We are not seeing any commercial sales coming out of this plant.
No, this will be a pilot plant, and the idea is to demonstrate a technology for PLA. Just very briefly, I won't go into details, but there are only a couple of companies in the world who have the technology today, and they are not letting it out external to themselves. So they are only using it for their own capacities, and our attempt is to bring a very different dimension to this whole field and bring Praj's competence to play in terms of our understanding of the entire biological processes and ensure that we are able to provide a viable solution for PLA.
Got it. Sir, and this 100 crore capex on the ETAC part under Praj GenX, what kind of revenue potential will this 100 crore capex entitle?
So the idea is that, of course, 100 crore capex, as you know, in the modules business, we have to create a basic facility which can lift and shift heavy material. So that is why a lot of investment goes into that. And then once the basic infrastructure is set up, we are in a position to then leverage that for making multiple modules over a period of time. So this 100 crore investment should actually potentially be able to do almost 30 to 40x kind of a sale out of that facility. But over a period of time, some more automation will walk in, some specific machines can walk in. So that will happen as the facility starts to develop. But the first installment of the first tranche of 100 crores as we start to invest, our expectation is by end of this financial year, we'll be able to make it functional from a customer perspective.
Got it. Thanks, sir. I'll come back in the queue, and all the best. Thank you.
Thank you. Next question comes from the line of Shailesh Kanani from Centrum Broking. Please go ahead.
Thanks for the opportunity and congratulations for excellent set of numbers, sir. So first, I would like to know outlook on CBG orders, how we are seeing the pipeline, and have we booked any orders in this quarter, additional orders on the CBG plant?
So CBG activity is still not at a very high level, and I'm talking now market activity level, is still not very high. We are beginning to see an increasing interest from customers, but it's still not somewhere where I can say, you know what, there's a very healthy pipeline that is building up for inquiry, etc. So that is slow making. As I mentioned, and also one of the facts is that while there has been a lot of expectation around different feedstocks, the fact is that there is no proven capacity on ground which customers can rely upon, and that is why the HPCL commissioning takes a very important dimension. As mentioned, that by end of June, we will be in a position to start dispatching gas from there, which will clearly establish a high-yield technology, which is one of the key requirements for this to go forward and become effective. Because there are also some more, what I would call the last-mile connectivity issues that need to get sorted out, and I think all the elements in the value chain are working on resolving these issues.
So the traction is slow as of now, but when do we expect it to pick up?
So I think I'm probably the better placed to answer this question down the next quarter somewhere around, because we need to see this performance established and see how many of the issues are being resolved. We are very confident that our technology will showcase that we are able to produce best-in-class performance. Having said that, we need to wait till the proof of the pudding is there on the ground, which is not too far out.
Fair enough. Sir, just wanted to understand the accounting treatment of the 100 crores demo plants, what we are putting up, I think 2 plants in total for Bajwell. So how would that accounting treatment go? That would be debited to P&L or there will be capitalized in the book? I think it will be debited to P&L, right?
Sachin, you want to answer that?
Yeah, so this investment is actually meant for not one product, but it is like a multi-product kind of a facility. So it will sit in our asset side. 100 crore will not come to P&L.
Okay.
For example, the way in which we have built up our demo plant for 2G or the demo plant for CBG for testing different feedstocks is sitting in our fixed assets, and naturally the depreciation and operating expenses are getting debited to P&L. And the asset block will sit on the balance sheet side and not on the P&L side.
Okay, sir. I thought that they would be amortizing the year. Sir, only one more question. Sir, our book-to-bill ratio has deteriorated, obviously, because we had excellent execution in FY23. So it is barely now 1x TTM basis. So how does the management view this? And as we are entering, are we entering into a territory where this can hinder growth rate going ahead? Last question for my side. Thanks a lot.
I couldn't get the question clearly, Shailesh.
Yeah. I'll just repeat it. Our book-to-bill ratio on TTM basis has deteriorated, right? It is barely 1x in FY23 revenue terms. From 1.2 what we had in FY.
So your question is that our revenue booking versus the outstanding order booking, that ratio is deteriorating, am I right?
Yeah. Because FY23. Yeah.
Understood.
So frankly speaking, the way the execution capabilities or capacities get built up, we have started to build these capacities. GenX is one such example that I gave you. We are very confident that we will be in a position to continue to build. So I don't see that to be a concern point at all, whether we will be able to book and bill higher or lower number. Probably we will do a better performance. So capacity is not the constraint. Having said that, as we go through the year, this year, obviously there were some, as I mentioned in the past as well, that the year of two halves, one when the commodity prices were completely different, and in the second half, they stabilized well. The movement of labor force, etc. So we are now in a position to say that we have reached the capacity built, and where we have been able to serve even higher book and build. If we book during the year, we will build that. Of course, that also depends on customer cycle times, because as I mentioned, especially for our 1G business where we are building more starch-based plants, those project cycles are slightly different than a sugar-based plant, for the simple fact that there are many first-time entrepreneurs who are putting up those projects, and therefore sometimes the timelines may get stretched.
Okay, sir. Thanks a lot. I'll turn back to you.
Thank you. Next question comes from the line of Vikram Suryavanshi from PhillipCapital. Please go ahead.
Yeah, good afternoon, sir, and congratulations for good numbers. I just wanted to take this question from Levin forward, that low carbon opportunity, what we are talking about USA, is it more linked to the, say, 3 billion gallon requirement of SAF only, or is there a possibility that USA, apart from the SAF, there could be increased demand for even existing ethanol base also, just to get the landscape of this low carbon opportunity?
So Vikram, for production of SAF, very clearly, and especially on the ATJ pathway, where ethanol becomes the feedstock for SAF, the requirement is clearly for low carbon ethanol. That's number one. So all such applications where one wants to follow an ATJ pathway, a low carbon ethanol is a necessary input that is required. So plants will have to decarbonize their processes. That is number one. Number two, the process of decarbonization is also a process for improving efficiencies of the existing plant. It's not only decarbonizing, it also improves the efficiency significantly. So there are plants who are now talking to us because it makes economic sense for them. Forget about the low carbon argument for the time being. They are saying it makes sense for me. For example, one of the solutions will cut their steam consumption by up to 90%. Now, when that kind of a thing happens, their operating costs go down and margins improve. So obviously, the producers who are thinking in terms of being cost efficient, improving their margins, improving the energy efficiencies, they are differently focused. Also remember that a lot of capacities in the United States were built at least 20 years and before that. Okay, and therefore a lot of those plants are now coming up for a refurbishment of sorts because they will need to improve. A benefit of all these would also be that they will be able to go to a low carbon ethanol. So there are different levers that will drive that market for low carbon ethanol. The big lever amongst them is obviously the requirement itself.
Okay, got it. And one more question on this CBG you highlighted about tech side infrastructure will take some time to pick up. But just to get within that, if you look at the sugar company side, particularly from press mud opportunity to CBG, is there any, how is the feedback coming from that? Probably they can have their own requirement for transportation requirement of the sugar factory and all that. So can that ecosystem work in a closed loop for sugar companies from like press mud to CBG and use within their basically factories? How is that opportunity? Is it practical?
Yes, Vikram. So, for the sugar companies, very clearly the press mud to CBG also offers a very attractive opportunity now on multiple counts. And also let us understand, because there is a proven commercial working model on the ground, proven on both north and south of India. Having said that, I think what is also very important is to understand that for the last 2 years or so, a lot of mill owners and the customers were also busy setting up ethanol capacities. So this is also a question of prioritization at their end as to what they want to start first and then start next. The third is that press mud based plants have a very positive thing in their favor, that the output, which also includes fermented fertilizer, organic fertilizer, that is of a high grade, and that becomes very easy for them to create an additional revenue stream. As we move through the year, we expect that a lot of sugar companies will start thinking positively about setting up their own capacities.
Okay, and before just closing, can you share what was the grain and sugar order mix in our order inflow for this quarter, broadly?
Sorry, is the question what percentage of our order booking was starch based? Is that the question?
And sugar based in our this quarter's order inflow.
Just give me a second. Okay, so sugary feedstock versus that is about 60% at the yearly basis. 60% of the capacity came on starchy feedstock and 40% on sugary feedstock.
Got it. Thank you very much.
Thank you. Next question comes from the line of Lokesh Marul from Nippon India Mutual Funds. Please go ahead.
Thank you. Congratulations, sir, on excellent set of numbers and execution. My first question is on the same breakup of sugar and starchy feedstock-based orders within bioenergy for the quarter of Q4.
Sorry, so what's the question?
So the same breakup which is made for the year 60-40, what would that breakup be for the quarter?
Pretty similar. I mean, nothing much to choose. Fairly similar.
60 on starch and 40 on sugar. So also, sir, one question on this side, sugar side. Like you had highlighted last time that India had the production of cane was at all-time high levels of 40 million metric tons, right, last year. This time it has come down by 10% or so. Are you seeing any moderation on the sugar side? And at the same time, given that the broken rice prices are quite contained at this point in time, is it helping you on the starchy, on inquiries on the starchy feedstock order inflows by any chance? How is it shaping up at this point?
Yeah, so Lokesh, one clear thing is that in a manner of speaking, the sugary feedstock gets restricted to few states, whereas starchy feedstock does not have that kind of a restriction, right? It can, and as I mentioned, the government is also pushing for quote-unquote ethanol starved states to starchy feedstock. So all these 8 states that I mentioned are starchy feedstock. There is no sugarcane there. So as we start to spread the EBP 20 program reach, more and more ethanol would be required also to be served into non-sugary states, which are not the traditional producers of ethanol. So we do believe that there will be a push or there will be continued higher share of business for starchy feedstock. Having said that, I think sugar mills are also understanding their very, very important role that they will play in this overall program. And I don't think we are going to stop at ABB20. It's going to go. The ethanol is going to become a very important element of our overall energy mix, and therefore they could get a very important dimension for us to remember. We have not talked about it before. Is the fact that sugar-based ethanol is low carbon intensity ethanol as far as India is concerned. So this is a very important dimension in favor of sugary ethanol, sugary feedstock-based ethanol. And we'll have to see as to how it goes. There are many other questions to be solved, but I'm sure that as we go forward, we will see a different dynamic emerge on this space. As of today, as we see it in the immediate future, yes, starchy feedstock will be higher than sugar.
Okay. And so given that if, let's say, the monsoons are lower than expected, the precipitation is lower than expected, in that scenario, how is it? Are you expecting any policy from the government to, so that these projects on starchy feedstock side as well, and both sugar as well, they are not hurt from a margin point of view, if at all there is inflation within both these commodities, agri-commodities?
I have no view to give you on this as to what government should or will do, because we don't know that. We are still forecasting normal monsoon. We'll have to see how that thing develops out. I think what is very important though, that if should such a situation arise, I think that's when we will start to understand the value of 2G ethanol that we've been talking about for quite some time. That the eventual solution lies in our ability to use the waste feedstock. And I think that by that time, of course, we would have also, as I was mentioning earlier in my opening remarks, we would have stabilized the IOCL Panipat plant as well. And I think that would be a very, very big test for us. And I mean, I say us, it's all of us, not only Praj, but all of us who are the involved entities, to ensure that we are in a position to create a sustainable path forward. And we clearly see that as we start to move to the future, and not only for this monsoon, I'm talking in general, that there will be a definitive play for the 2G feedstock-based ethanol production as well, because that is the lowest carbon intensity ethanol.
Sure, sir. Understood. That's all from my side. Thank you.
Thank you. Next question comes from the line of Amish Kanani from JM Financial. Please go ahead.
Yeah, hi, sir. Congrats on a good set of numbers. Sir, as we also previous part.
Can't hear you at all.
Sir, is it better?
Yes, thank you.
Yeah, sir. So, sir, our outstanding order book, if you see on a year-on-year basis, has grown by 20%.
Hello. This is the operator. Hello, this is the operator for the ongoing conference of Praj Industries Limited. Can you hear me? Hello, Josh, can you hear me? Hello? Josh, this is the operator. Can you hear me? Since I am not getting a response from your end, I will have to disconnect you from